is going out there. It's December 22nd. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. I did see Spider-Man last night, which was absolutely awesome. Holy cow. It was really, really good. So my nieces and nephews, I think there was 11 of us in total. But people are definitely going back to the theaters, which is really, really cool. So just want to share that. You get a chance to definitely see it. A little bit long, 2.5 hours. 3 hours with previews, which, you know, you're there for at least a half an hour with the previews. But the previews were amazing because there's a lot of great movies coming out, guys. A lot of great movies. I think movie theaters back. I think people aren't as scared anymore. They understand COVID and the new variants and all this. So I think everybody's starting to get it now. And you know, that fear level is definitely going down because we know more about it. We know who it impacts. And, you know, if you're vaccinated, you're not going to get it as bad. So, yeah, it's definitely more people going back to the movies, which is great for some plays. We recommended a play. I'm not talking about AMC and stuff like that, but there is a great play that we're up on that recommended. And I think it's going to really, really, really take off, especially with the new set of movies coming out just through February and March. When you see the previews, it is pretty incredible. So we usually do, for this format, it's Daniel and myself. Daniel's back with his family on vacation. So like I said yesterday, I'm going to take some Q&As and send those questions at frankcurzioresearch.com. Got a lot of them, which is cool. And let's get to some of them, right? In this special edition, just for the holidays. Next week, we will be off. Get my whole company off next week because, you know, they really worked their asses off and did a great job this year. And we had a great year. So, I wanted to reward them for that and make sure they spend time with their families and not, you know, a lot of our workers, they love what they do. They're having fun. And however, I've been in this industry long enough, and you could say this for any industry, even if you love what you do, but if you're working like a dog and it's just taking over your life, remember, you're at the workplace more than you're at home, right? Any place else just about, you know, not including sleeping and stuff like that. But, you know, you have to enjoy it. And more importantly, you have to be able to take a step back. And just forget everything and be with your families and stuff like that. Because even when we have big launches, as you know, especially on the senior level, it's like, well, you know, vacation, I won't take vacation. I'm like, take it. Don't worry about it. We'll cover your ass. It's fine. And yeah, it's really important to me because I've seen on Wall Street where people do burn out, and it's not pretty. It really isn't pretty. I don't want anyone to burn out, especially at this stage, you know, early in our growth and doing well and stuff like that. So I just want to thank my team for doing a fantastic job. And that's why I'm doing this format, right? I didn't even have tomorrow I usually do an interview. I didn't ask anyone to come on. It is very, very close to Christmas holidays, so I don't worry about it. So Q&As this week, and let's get to it with today. Starting with Sam. He goes, hey, Frank, happy holidays. Why list your token, Curzio Equity Owners, on tZERO versus Coinbase or other crypto exchanges? If STOs are crypto tokens, what makes tZERO stand out more versus an established exchange like a Coinbase, Binance, etc.? Thank you. So, Sam, when you look at Coinbase and you look at Binance, they are utility tokens, right? Those are utility token sites. They don't trade security tokens. Coinbase has the licenses to trade security tokens. They need it because the SEC, not if, but when they deem a lot of these securities, because they are securities, then you're going to see all of these companies on Coinbase outside of the top 5 or 6, which have been deemed, you know, they're not securities, that the Ethereums, the Bitcoins, these Bitcoin Cash, Litecoin, you know, a few of them. But they're going to deem securities. And when they do, they're going to have to show all the financials. They're going to have to show their insider holdings. You know, these guys spent a lot of that money. You know, you're under but we're a security token. We know. We even got audited. There's not a company there that's going to get audited who's a utility token. Absolutely not, right? Because that's why they're doing the utility token, because they can get away with a lot of stuff. It's less regulation. There's some great companies in there, but I'd say it's only about 10, 12% that are really good. And the ones that are ICOing right now are coming out with very big backing from venture capitalists, so they're structuring them the right way, right? Where there is an actual utility function, where some of these don't have a utility function. That's the only value of the token, is a utility function. If there's nothing you could do with the token or buy anything or use it for anything, it's worthless. Because someone comes over and takes over these companies, and you know, Apple says, "Hey, you know what? I like whatever. Pick your coin token, whatever, utility token, and it's trading at a $300 million valuation. They say we're going to pay $10 billion for it. You get nothing. You get nothing. You don't have an equity stake, right? Security tokens are different. You own equity or they're backed by assets. I like the ones owned by ours, equity token, right? So that's what tZERO does. And one of the only ones to do in the U.S., right? Securitize just opened their platform, but very, 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 very new. Again, I don't like it to where, you know, we're going to have platforms that are great at blockchain, creating digital tokens, and all of a sudden you become a brokerage firm and a trading platform, which is a totally different business, right? We've seen that with Disney going into streaming, how difficult, you just jump in, and that's kind of like the same business. This is different. Hey, creating blockchain and going through this whole entire thing and then become and say, hey, we're a broker dealer because we bought a couple licenses. It's not it's not gonna say it's a recipe for disaster, but there's a massive learning curve there where a lot of shit's gonna go wrong. And we learned that. We learned that through our process, right? So tZERO's been at this for 3-4 years now, finally opening up this market. Now the SEC has opened up. These are security tokens. Coinbase does have those licenses, and they don't need to do that right now because they're able to trade Doge and all these crazy coin, which is fine. But if they do that, a lot of these companies, they're going to run off of this platform because they're not going to register. They're not going to show their financials. They're not going to show their holdings. You're going to see so much shit inside these companies. It's a joke. And they will run to Binance, which, Binance has a U.S. platform, but Binance, outside the U.S. and outside of these U.S. platforms, you'll see a lot of these utility tokens just run for cover. And a lot of them will crash because you're going to see trading reduce significantly because they're all going to have to come off U.S. platforms. That day is coming. It's going to come. And people may disagree with me and say, look, I know regulation. I know the SEC. That's the way to regulate this because you're always going to have shit that you can't track and DeFi and stuff like that. And people losing money. And it's hard to control because if you lose money in these things, everybody wants, decentralized finance, just totally off the record. Yeah, but when you lose your money, who do you call? Nobody. Goodbye. You lost it. It's gone. It's gone. What company was that was asking that by accident, I forgot what platform it was, lost a couple $100 million and was saying that it distributed to people saying, hey, you know what, we're going to alert the tax authorities or whatever. They couldn't even say anything. Big deal. Alert the tax authorities. You just gave this to me. They couldn't even say anything other than that. But, okay, here's $100 million. I'll pay $30 million in taxes and keep the rest. You gave it. There's no laws. There's nothing there. Guess you're going to say fuck off. So you need the regulation behind it. It's almost, like our economy and stuff, right? You don't want too much government control, but you need the government there to police, right? You really need this way. There's a lot of bad actors in every industry, and there's nothing you could do. And you want to make sure that, these guys get nailed if they're messing around with retail investors and stealing money, right? So, security tokens, it's going to be similar to an E-Trade platform. You're seeing lots and lots and more tokens come out. This industry is here now. It's going to be 2022 is going to be the year to security token. NFTs, non-fungible tokens are basically assets, right? Backed by assets, security. So when you're looking at these exchanges, tZERO is pretty much one of the only ones. There's others that are opening, and 4 or 5 of them, and we'll explore. And when Coinbase does go security tokens, yes, we're going to look to trade on that platform as well. Just so you see Bitcoin, Doge, whatever, trading on 10, 12, 15 platforms, we want to get more and more liquidity. That's great for us. We do that by trading on more and more platforms. So when Coinbase opens up, we're going to be a perfect candidate. Why? Because we did it right. We structured it right. It's an equity token. You're looking at our financials are great. So not great in we are growing, but I mean great where we were audited last year. So there's not a lot of companies that are audited. So here's you have to go through all the checks and balances here. They're not just going to put anyone on there, and which means there's a higher barrier to entry because you can't have just any bullshit trading on it, but also you're going to have high quality. And that's going to result in institutional investors coming on board. I think we're going to see that. But right now we could take our company anywhere. We're a financial publishing company. We're in the security token industry. We're probably going to open up consulting, marketing subsidiary next year. Also, we could do whatever we want now, right? So it's kind of like going in different directions. Where do we want to go with growth? And where we are right now is perfect. I mean, we could even really get into the metaverse if we want. Start buying properties and different things, invest in certain companies. That's what I like about this, where utility tokens, you really don't know where they're going, what they're doing. They had a white paper saying, hey, this is what we're going to do and build this technology. And then they start investing, in other tokens, which they didn't say in their white paper, right? But you got all these investors. Again, it's the definition of security. You're raising all this money from investors. You're trading this. People are making money. Expectations are high that you're going to make money. This is a security. It's a security. Checks off all the boxes. Okay. So, it's not a utility for most of them. So when that happens, and it will happen for a lot of these things, then you're going to see, Coinbase open up. You probably see Gemini open up to security tokens. And that's where we're going to be in the driver's seat, which I really love because we're ahead of the game. And we did all this. And I can't tell you how many companies, how many of my friends are finally coming to me that didn't want to invest in this. I told them this is a really good idea if you want to invest in it. We had early investors. A lot of them were like, throughout the industry. And, we have tons of contacts doing this podcast for such a long time. But it's kind of amazing how many people come to me now within their industry. How do we create a token on gold, on uranium, on this, on that, on that, security tokens? So you're going to see this industry start booming. But right now, Sam, it's tZERO, who's the largest based on liquidity. And we're going to be trading on there. I'm going to say early Q1. We're going to try to push it out in next week. And you know what? It just didn't make sense. It didn't make sense for us because I know a lot of people are going to be on vacation. We want this to be a big launch, right? This is like a really big event for us. I mean, it's almost like an IPO. It's going on New York Stock Exchange or NASDAQ. And yes, we were trading on Merge. We're no longer trading on Merge. We had to list from Merge in order to go on tZERO and freeze our cap table. So all the data is already transferred. And then I said, let's do it fourth week because the first 3 weeks, man, I'm going to Consumer Electronics Show. Guys, tune in, TikTok, live videos. Check out our website. I've given you so many different ideas through videos. I remember Kodak. Nobody had Kodak. I did a live video that was 3 minutes and said, guys, I'm going to give you a name. You're going to laugh at me. And it went from $3 to $21 in 6 months. And just different ideas that I see there from being in the market so long and saying, what the hell does Kodak have 2 separate booths here? What are they doing? I start looking at it. Insiders are buying. I'm like, I don't know what's going on. You can't find out a lot of information, but, you don't see big insiders buying a company like this unless something's going to happen. And, they got that contract and whatever, it's lower now, but, they got the contract with Trump and then it got investigated for the manufacturer, whatever it was. But there was something coming, insiders were buying it. And just going there and seeing a presence with Kodak that I'd never seen before, going there for 8 years. These are the ideas I get at the Consumer Electronics Show. So definitely pay attention, guys. It's going to be a lot of fun. That's from the 3rd to the 8th. Then I have another major conference to go to the Bahamas. So we're going to have this token launch pretty much the 4th week or the first week in February or the last week in January, because that gives us an opportunity to really market this. Also, tZERO wants to market this, but we want to let everybody know, hey, you know what, this, we're here, we did this, and make it a big event where at first I'm like, well, let's just get on their exchange and whatever, but no, and it's not an exchange, it's an alternative trading platform to be, politically correct and compliance wise, but they call them ATSs, right? Alternative trading systems. So, but having that event in Q1 is going to be awesome for us. So for me, being here those 2 weeks, 3 weeks, and being able to focus, and not only that, look, we're going on this exchange. There's a lot of investors that are going on. There might be questions, and being on the road. If I'm on the road, my team's working extra hard to get everything out and stuff like that. So we want to make sure we're here for you, right? We have to make sure that process is smooth because people who are listening to this right now know our podcast, they know our brand, they know our reputation, but there's going to be a lot of new people who don't, and they're going to be skeptical, and they should be, right? Who is this guy? We went to other newsletters, and they sucked, and they burned us, and all this shit. That's the audience we want to build up right now, right? These people who have had shitty experiences elsewhere, let's teach them, hey, this is how it's done. You're going to see us through the research. Yes, we're not going to get everything right, but you're going to see the work that all of our analysts put behind this, the research, the new ideas, the boots on the ground. It is entertaining. You're going to get ideas, well ahead of the curve, which I've done all my career, especially going to conferences like the Consumer Electronics Show. Went to Johns Hopkins a couple weeks ago to look at this company, met with heads of 2 departments. And, it's a micro cap company that could be a competitor to Humira, which, sells it's the largest selling drug in the world. Really exciting stuff. I wanted to see it firsthand. So just getting lots of ideas and stuff like that is cool, but that's the audience we want to attract, and that's why it's going to be a really big event. So, and I want to make it a big event. And, if anyone has questions or comments, feel free to email me, frank@curzioresearch.com, but I want to be here for that. This way we can walk you through it, make sure that first experience is great. Because if it's not for those people, they're not going to come back, and they shouldn't, right? That's the way everything is. I mean, if you're trying something new, you don't have a good experience, you're not going to come back. So, that's in order to grow our business, that's where we are right now. Everyone that knows us, yes, they're subscribers, subscribe to lots of products like you guys, but, to really grow this business, to scale it now, it's going out to everyone who doesn't know us, and how do we market to them and tell them, hey, listen, we're doing the right thing here. We have a great brand. We have great products and stuff, and we have to show them, and that token will be a big step. So a lot of people are going to probably sign up to tZERO, which you have to do to buy it. We don't get paid or anything, but if you want to, purchase our token, you get an equity stake in our company. We get taken over just like a stock. You're going to get paid. So that's an equity stake in our company, and it should be based on our financials and how we do going forward, and where we're going with our growth angles and stuff like that. And that's the way you should trade. If it's cheaper, we might look to do buybacks. If it's more expensive, then maybe we'll do a capital raise to raise more money. This way we could build the company even further. So, we want to trade like a stock and get that premium valuation and use that stock as currency, especially to acquire new businesses. But it's going to be a lot of fun going forward, and I'm looking forward to the next year. So hopefully I answered that question about tZERO versus Coinbase. We don't have a choice right now, but tZERO is the largest, and now we're going to be trading on it in a couple weeks. Let's get to the next question from ML. He says, hey, Frank, this is going to be a nice year-end question. What has been your best trade in your career? That is a pretty good question, actually. I would say, Uranium Royalty was really good. So just, Amir starting that company, I thought was a fantastic idea. I think it was 2016. And I was able to get in 25 cents. That was very speculative at the time. I think I put in maybe 25 grand and then put in more at $1. And I know they did more capital raises after that at $1.25 with warrants and $1.50 at warrants, which I didn't go in because I was in early, so I didn't bother with the warrants. But I wound up selling half at $2.50, and then, I'm letting the rest ride because I'm a big believer in uranium, and that is like the premier uranium company. I think it's going to do fantastic. And it's over $4. I think it hit $5. I don't know where it is today. I really don't care what it is today. I just think it's going to be double digits one day. And maybe I'll take some more off the table, but it's been a monster win for me. Ethereum, buying Ethereum at 180. I've seen 400-500% gains in a couple months in crypto. That's why I'm telling you, as someone who's been in the market all my life, that you don't see gains like that in the regular markets anymore. Yes, you could pick out an isolated example of a biotech, and you bought it ahead of phase 2 data that was positive and went up 300% in one day, but it's very, very rare. And you can't, you buying, look at Robinhood, look at Beyond Meat, look at where these companies came out, look where they're trading. Look at most SPACs. I think it's like 65% of them are trading below, that $10 price now, whatever they came out at, right? Because they're inflated valuations. You're buying these things at inflated valuations. You're buying Rivian at $100 billion valuation, so a lot of that, wouldn't you like to buy it at 2, 3, 4 million, $10 million valuation? You get that opportunity in crypto. And, the risk is look, you're taking on a lot of risk buying these companies that have no revenue right now and that can go down 60, 70%. Could these other companies in crypto and, again, these are utilities that could they go down a lot? 50, yeah, they can go down 60, 70%, but your reward is 5x, 10x, 20x. I mean, even now, if you look at the price where, Bitcoin's wherever it is today, 43, 44, I don't know where it is today. It was 66 and it came down, right, over the past month and a half. 2 months or so. Even if you take today's price and you go on coinmarketcap.com and look at the top 30 and just look at like an 18-month chart, they're all up 20x plus. And where could you see? So it's not like I'm pulling out isolated examples. I mean, you'll see it in our newsletter how many of them that were up 30x, 35x, 27x, 15x, 17x. And they're volatile. I was down 30, 35, 40, 45% on some of these things early on, taking small positions. But man, when it comes to crypto, again, I bought Ethereum 180. I sold it around 1,500. It makes me an idiot since it's wherever it is. I think it's a little bit below 4,000. Man, I wish I held on to that one a little bit longer, but I can't get pissed off with a gain like that, and that's why investing is tough and trading is tough because you always look at the what if. And now, you would buy something, let's say if you bought Ethereum 180, you sold it 1,500. Now, the next time around, you're like, oh, shit, I don't want to sell too early. It's hard. Like, day trading is really freaking hard, guys. Most people get crushed in day trading. Most people. When I say most people, 98%. They want to be day traders. It's gambling, and you can't. It's just like gambling when you win a couple of games early on at the 1 o'clock in football. You're gonna bet the 4 o'clock, even if you don't like them. That's just it's almost impossible. It's like dangling a big steak in front of a lion. Like no matter what, right? No matter what, it's just most people don't have that discipline. Well, okay, I'm gonna get out at 8%, or I'm gonna be at 8% loss and let my losses, or let it ride, or. But I know when it comes to day trading, a lot of those people, they don't have massive winners. Unless they're options and stuff like that. But if you're buying options and you have these massive winners, that means you're taking on an excessive amount of risk, meaning you could lose a lot of money. Most of the best traders are like, you're generating small profits, here, limited losses. So it's really, really tough to day trade. But, those are, two of them. I've got, lots of them over my career. Those are two I recently remember. But, I will tell you this, guys, my best investments have come, investing in private companies or investing in private placements where I've gotten warrants. That's really how you make a fortune. Unfortunately, a lot of that's only open up to accredited investors, right? And I'm able to get in certain circles. And, I bring that to Curzio One. You don't have to be an accredited investor being Curzio One, but we offered 3 or 4 deals, I think, through Curzio One. 1 or 2, I think, are down a little bit. I'm very, very happy with them. But one of them is really, I'm super optimistic. I mean, it's a fund that we invested in. It's a, biotech fund that has, access to some of the greatest early stage startups. And I think they're up to 8 investments plus. And holy shit, man, these investments are really good. I'm really excited about that one. And I'm really excited about the other 2. I mean, one was gold, one was helium. And, gold has been kind of crappy lately, but, I'm positive on this. And, I think we could do very, very well on these names. But that's where you really, not that all those deals work out, but just having access and being in the right circles, because, now you have innovators and talking about, how they're going to structure these companies and how to get investors in and stuff like that. And that's the early stage, right? You get in there, you significantly lower your risk to the point where if one of these small companies becomes mildly successful, you're going to make a fortune on it. You're going to make a fortune on it. And even if they're not mildly successful, like with these SPACs, I mean, when they're doing these pipe deals before they actually come out, right? They announce that the company they're going to take over, and then they got to do the financing behind, and they're doing these pipe deals. I mean, these guys are getting in at 3 and getting in warrants at 4. So even if that thing goes from 10 to 7 to 6 to 5, these guys are making money while you're getting murdered. It's unfair, right? And we try to level the playing field. One good thing is Reg A now. You can raise money through Reg A, but you don't. When you see Reg A, it's still kind of like a black eye a little bit, because if you're going to raise money and you have institutional support where your idea is that good, you're not going to do Reg A. Because when you do Reg A, it opens the door to retail investors. But now you have tons of retail investors, all these people investing. And say if it doesn't work out, these are the people that are going to maybe, call this, I lost $1,000. It was my life savings or whatever. That's what you open a door to. I mean, they, again, the Jobs Act and, Reg A and the company and security tokens that's trading on tZERO's platform, Exodus, raised $75 million very, very, very quickly. That's the max you could raise. I mean, you could raise really big money in that in Reg A, but that levels a playing field a little bit. But still, I see people using Reg A as a way to say, because their deal isn't really that good, and they're like, okay, I know I can raise money for the general public because the general public's dying to get into private deals, and I don't blame them. They see, all these other deals of people making a fortune, and the rich get richer and stuff like that, and you have to have certain status to get into these deals. Reg A levels a playing field, but there's still a lot of bullshit around it, which we're trying to, hopefully companies just weed out. Kind of like crypto, a lot of BS companies using crypto and launching ICOs with bullshit models just as a money grab. Same in STOs, I've seen it as well, in security tokens, where guys have come to me and I'm like, they're like, well, it's based on these assets. That's what the ownership is going to be. And then we're going to pay out a percentage of profits to our shareholders. I'm like, you're a freaking new company. You're not going to generate profits for 10 years. So they're getting fucking nothing. Yet you're raising $30 million, right? You're going to put that in your freaking pocket to grow the company. When you grow it, you guys are the biggest investors in the company, but yet, the individual investor, they're not even getting equity in this. They're going to get a percentage of profits? Really? I mean, small companies, their job is not to really report profits, right? You want to put all that money back into the business, back to grow. Amazon did that for 20 years, 25 years for reporting profits. Netflix as well. I mean, that's what you do. So, I could report massive profits for my business if I cut staff and I stop marketing, right? And make our business look really, really good. We're growing. We want to grow. We're a small company. That's why our investors invest in us, to grow this to potentially becoming $1 billion company, not to just, stand still and be where we are, where, and we're not doing anything. So, Reg A does level the playing field a little bit. But, you have to be careful with those deals. I'll vet those deals. If we have Reg A deals that come across my plate, you'll probably see them and be able to invest in those Reg A deals through, Curzio Research Advisory, and also Curzio Venture Opportunities and things like that. But that's how you really make the most money. And, for Curzio One, again, it's a premium membership. It's worth every penny. There's not one person that has gone in and said it's not worth it. It is a high price tag, but you get all of our services, all of our newsletters, everything, for free now, and everything we produce going forward. And you pay like a $4.99 fee for every year, right? And that really is like, a maintenance fee. It's not like a refrigerator fee in a hotel. It doesn't have a refrigerator. I mean, we have to pay, we have to distribute, we have to design these newsletters forever. You're in this thing, right? So, to pay itself off and to make sense, that's what we do. But it's definitely worth it because you also have access to some of these special smaller deals that I'm getting into that, a lot of those people have taken us up on. It's not a lot. It's a few dozen that are in there, but that's where you really make big money in private companies, and you want to have exposure to that, guys, if you can. I know it's hard. You want to be an accredited investor, but the Reg A allows that, and that's what opened the door for crypto. It's why it's a $2 trillion industry. It's the first time ever you're seeing the individual investor have a leg up on Wall Street, and Wall Street's late to the party here. That's why you're seeing these massive returns, not when you're able to buy Rivian at a $100 billion valuation or Virgin Galactic with no revenue at a $15 billion valuation. yeah, these things are going to crash and not do any revenue, but that's the first time individual investors get to see it. Look at Robinhood. Again, Beyond Meat. Look at these things get destroyed, man. It's freaking insane. It's insane. Even Coinbase as well. You know, a lot of people who are on Coinbase were able to get into that, and then, you know, it crashed. It's down to 240. A lot of these people bought above 300, 340, whatever it was. I think it went to 400 at one time. It's a good platform. It's a good company. I just, you know, but it has come down with crypto. But, you know, you get my point. As an individual investor, you only get to buy these things at really expensive valuations, and you're not getting in early. And to make absolute fortunes or life-changing gains, you want to get in early in some of these things. You know, so we're in the right circles now, and we're able to do that for some of our clients. I want to try to bring that to all of our clients and bring good Reg A deals to you guys as well, right? I mean, I want to level a playing field. That's why I've started this. I can make enough money, as you can see, you know, to easily retire, to support myself, just through a lot of these deals and stuff like that. But, you know, I love what I do, and I work hard at it, and you know, I'm going to bring a lot of this stuff to you guys, right, if it kills me. So we level a playing field here, and, you know, you can get into a lot of these deals. Not all of them are going to work, of course, but you know, you have that opportunity to make 30, 40, 50x gains again, and those are life-changing. And that's what you want when you're speculating with your money. You want unlimited upside and limited downside, which may mean your full investment in the stock and $1,000 or $10,000, or you put a stop loss on at 35% where you limit your downside, but you don't want to invest in something with 50% downside where you have 75% upside. That's not worth it. That's not worth it. You want to make sure that you have 2x, 3x, or more, and hopefully unlimited gains on the upside. That's how I invest. So hopefully, yeah, it's a good question, Mel. I appreciate that. Let's get to one more. This is from Jerry. So Frank, what's your favorite large cap to own going into next year, and which is one to avoid? Yeah, I like that question. Given the market conditions going into next year, my favorite large cap is AT&T. I'm down on it personally. I know some of you are down on it as well because I have it in Curzio Research Advisory portfolio. But once they get that deal done, which I'm expecting a little bit early, it's definitely going to happen in 2022. They're going to split into two companies. And I went through the numbers and the data. And I understand that this deal is taking long. So the reason it's taking long is, again, it's a lot of markets and international and a lot of moving parts. And I get it. And that results in institutions being like, well, you know, I'm bored. I don't want to really get in this. So, you know, what's going to be the catalyst? And, you know, they said they're going to lower the dividend a little bit, which they should, because I think it was like 7%. So it's going to be like more like 3.5%, 4% for, I think, their wireless division. But when I look through the numbers and so I mean, the value that they're extracting by doing this is incredible. You know, half of this is going to be a pure play streaming company with Discovery, which is and will continue to be the second best behind Netflix by far. I mean, they're spending $30 billion plus a year on new content. The only one that could spend that much along with Netflix. I mean, Disney can't spend that much. They don't have it. They'll say they're going to spend that much, but they don't. You know, and all the others, you know, again, they don't have that kind of money or cash flow to spend on that. So you're going to get new content. That's the key to streaming, right? Is new content. It's not like existing content. It's because you're going to get sick of it and you're not going to pay for it, especially now everyone's going back to work and everything. When you're staying home every day to COVID, it's different, but it's all about new content. But you're looking at the new content that HBO has been producing is awesome, and they're going to merge with Discovery. So yeah, that's going to make them light years ahead of Disney. The other division is going to be a steady, massive income-generating wireless play. And that's going to have massive cash flows and a 3% plus dividend. Now, again, it's been slow developed, so I understand that the excitement has dropped off, so the company has fallen. You know, probably why it's not seeing those huge institutional inflows, but now that's starting to change. I mean, December, it just got 2 upgrades, and at these levels, given the market conditions of rising rates and inflation, and yes, you could say, well, AT&T has a lot of debt. They do, but they generate $25 billion plus in cash flow every year, free cash flow every year. I mean, put that in perspective, it's almost, take out the $1 trillion companies, the technology companies, and these guys generate more cash flow than any other company in the world. That's how much money that is. Free cash flow, right? So easily paying off their debt, easily. But, you know, you're going to see massive cash flow coming in from all these divisions. Again, I really like AT&T going into next year at this price. And again, with difficult market conditions, I think it's going to provide a safe haven. And I think it could easily return 30% next year and go up even a lot more the following year. I mean, again, it's down like 15, 20%. You know, it fell a little bit more, but you're seeing the upgrades come down saying, okay, this is a joke where it's trading. And once you see this deal and how great it is, again, when I analyzed the numbers and really dug through it for a while, I was like, holy shit. It's just a lot of times my biggest mistake as an analyst, I'm earlier than expected, which means I'm going to be wrong early on. But a lot of times that thesis plays out later on. This thesis, I think, is going to play out later on. I mean, they got all the tools in place. These guys are really killing it streaming. And, I think they have a ton of upside. The one I don't like is Ford. I don't think they're going to be able to deliver on all the promises when it comes to production. I mean, they're trading at a premium valuation. You guys did great in the stock. I went back and looked 2019, where I have a video to CES. Again, I'm going there next year, which is January 3rd, January 8th. So just, 2 weeks away? And I went back and looked from 2019, last time they had it, which was live, right? Last year was virtual, which kind of sucked. But I was at the Ford booth going over the technology, even 18 and 17, telling you about the EV technology and the billions they're investing and the stock was in the single digits, right? I was talking about that. Look, the stock is up a lot. Good. It great, and you're looking at EVs and they're going all in and technology, the Rivian investment. But it's going to be difficult for them to sell their current fleet of non-EV cars because they're promoting their EV portfolio so aggressively. And now you have all these promises of production, which they're not going to be able to meet. They're not. They can't be. They even said it, right? I mean, they didn't say it publicly, but you could read it and say, we're going to only be able to offer like 10%. That's why they stopped taking orders. They're like, demand's true. It's not. Demand's strong, but it doesn't have to be too strong because if you're looking at taking percentages, 100% of the F-150 truck, right? It's the largest selling truck, whatever it is. Say if it's 10 million that they sell, they're only going to be able to sell 10% of that. So even if 20% of those F-150 say, I want an electric vehicle because I'm going to put a lot of miles on this thing, it's pretty cool, they're not going to be able to get it. So it's not like, oh my God, we're seeing massive demand. That demand is coming from existing demand for the F-150 truck, which, is going to slide over to EVs. Now, they don't have great technology. The F-150 Lightning is coming out after the Rivian, which is out now. You're going to see some deliveries, the Rivian R1T. Rivian's a much nicer truck. Just go to YouTube. It's amazing. It was just named 2022 Truck of the Year from Motor Trend. Rivian is a competitor of Ford. Ford was able to invest in Rivian. They should even took over Rivian. Again, they made a lot of money and good for them. But they're competitors. And when I look at Ford being a super expensive stock, they're all saying the right things. I love their marketing now. They're very, very good at marketing, right? They're saying the right things. But, expectations are sky high, and they need to get everything right in EVs because, every single major auto manufacturer is doing the same exact thing. So you're looking at production, the timing is huge. Getting the materials to manufacture at scale for EVs, which they don't have yet, is huge. You better make sure you don't have any recalls on this vehicle. I mean, you're going to see massive competition out there, but we saw many companies saw streaming and said, we want to get to streaming, look at Netflix. Yeah, it's fun, it's nice, but, you got to spend hundreds of billions of dollars over like a 5-year period to charge people $12 a month, $13 a month, and Disney's understand that they can't even get $5 a month, right? They're lowering, they're giving away for free now for a month or two, right? So they don't have pricing power with it because there's so much competition. And they're not coming out with their best free content because their best free content is Marvel, which they have to release in the movies because that's what generates the most revenue for them, billions of dollars every year. So that's not even going to be on their streaming platform until after most people have seen it. But you saw how many companies want to go and stream. It's been a disaster for almost every one of them. I mean, same thing here where it took many, many years for Tesla to be where they are today, including being 1 month from going bankrupt in 2013, which Elon Musk admitted. But it's not easy to enter an insane capital-intense industry, which both of these are. I mean, it sounds exciting when you say, well, I'm going to become a streaming company, EV company, but Netflix, AT&T spending $30 billion plus on new content where you have Disney, look at all this Disney, Peacock, Paramount, Apple, Amazon Prime. Then you have, the live streamings, Fubo, Sling, YouTube, Hulu, right? So, which they stream sporting events. But outside of Netflix, Hulu is the second oldest streaming platform. And it lost not close, but 2017 lost $1.8 billion. In 2018, it had combined losses, right? This is like another $1.5 billion. Now it's combined for Comcast, Fox, AT&T, and Disney, who all owned it. Then Disney became pretty much, I think they're the sole owner, if not, maybe Comcast. They bought from Comcast and AT&T, and they took over Fox Entertainment assets. So they almost own like all of Hulu if they don't own the whole thing. But I know it was like $7 billion combined for AT&T's and Comcast stake. But losses have been so bad that Disney had a partner with Star, a very popular brand in Southeast Asia, to launch Hulu internationally because it costs so much. So, you're looking at Hulu, and you could say Hulu's a success story next to Netflix. Let me tell you something about Hulu. Hulu has 40 million subscribers, right? 40 million subscribers, generating $4.4 billion in revenue. And they're reporting a $500 million in loss this year. That's what they're expected to report, $500 million in losses, probably a little bit more. So you're looking at that's the most successful streaming platform next to Netflix. That's how hard this business is. Yeah, they can't generate income. Same with EVs. I mean, it's really freaking exciting. Don't get me wrong. It's cool creating a new EV. It looks amazing. By the way, you should see all the EVs at the CES over the past 4 years. Wait till you see them this year. I'm going to be there again next week. Just go to TikTok. I'm going to be streaming live. Just all over our website. You're going to see everything. Really, really cool stuff. I go there and, we have a media pass and I've access to so much stuff. Wait till you see the car, how beautiful they are. The only problem is they can't scale them. They can't scale these beautiful cars, right? But you have to see how amazing they look. Tesla cars are really ugly, in my opinion. They're kind of ugly. They're cool inside, but they're kind of ugly on the outside. These things are great. It's just you can't produce millions of them. But as you're producing this, what does this mean? I mean, how do you make 5 million of these cars? Where are the charging stations? By the time you release these vehicles, I mean, technology is going to be changing so fast. You have the latest, like batteries that go over 300 miles per charge. Because I can tell you, I'm not buying an EV that goes 250 miles per charge if one's out that has released, that goes 400 miles on a charge. Because, that has that battery technology. That's important. I mean, it's a big difference. It takes a while to charge these vehicles. So, it's a capital-intense industry. Ford is super, super expensive at $19-20. They're not going to be able to live up to those expectations. I think that stock will fall next year. And we'll see. I mean, if people still get excited about, their truck and everything, they're just not going to be able to meet production goals. I think they're going to fall short in a couple quarters of estimates, but we'll see. Maybe I'm wrong, but get to my point, I like AT&T. I think Ford's going to have another tough year. The stock may go up early on again on that marketing stuff, which is great with EVs. But once people realize that they're not going to get their EVs that they order until 2023, 2024, it's going to result in delayed purchases, which is going to result in weaker sales in these years as customers are likely to wait it out until that new EV comes to market. Again, they're not going to get it for a couple of years. They're not going to get it next year, that's for sure. All right, guys. So Money Flow Trader, we're offering a special deal. I told you why I'm doing that for you guys. 40% off a retail price, which is a great deal by itself, but you also get a year for free. But next year is going to be extremely volatile. Ginny is killing it right now. There's a period that you see the portfolio, you're going to see losses in it because this is a product that makes a lot of money when the market does not do well and sectors fall, or, again, she's buying puts, a very, very simple strategy, very easy to teach. It's on the website. She's going to walk you through every one of these trades. You can do it simply through your online banking account and provides a hedge. Not only that, you can make 3x, 4x, 5x, which she did when the market really fell during COVID. And now, you're looking at some of these stocks. The average stock right now, U.S. stock's down 25% off its highs. Think about that for a minute. And you look at the major indices going, we're down like 4 or 5%. The average stock. That's how crazy the market is. So your portfolio is down, and you're wondering why. That's why. A lot of stocks are getting nailed because the Fed's raising rates. It's a different market going forward. This is a way to protect yourself and generate money on stocks that are going to get nailed because even the ones that are down 25% are still insanely expensive. So this is a great product. This is the lowest we ever discounted for. If you're interested, that's cool. Also, I'm getting a lot of questions on holiday deals and can I purchase a subscription, one of my products, can I Curzio research for a third party or a friend, family member. So here's what I'm going to do for you guys until December 31st. If you want to take advantage, you can. If not, no worries. Every single one of our products, okay, not the Curzio One membership, but every single one of our products is going to be on sale. So front-end products, that's the lower price products, you're going to be able to get 60% off almost every one of them. That's going to take them below $100 a year, which is Curzio Research Advisory and Limited Income, Dollar Stock Club, Big Money Report, all for under $100. And our back-end products, I'm going to offer all those for 50% off. And that is Curzio Venture Opportunities, Crypto Intelligence, Money Flow Trader, Big Money Trader. All those products are going to be 50% off. We have that on our website at Curzio Research. If you're interested, that's my way of giving back to you guys. That's going to be available to December 31st, again, only to Curzio Research followers. People listen to the podcast. We're not doing that outside of our list. So again, Money Flow Trader, guys, if you're interested, it's 40% off the retail price. Again, great deal by itself. Also, I'm going to give you a free year. This way you're in this product for 2 years. I'll help educate you on how to buy puts, how to protect yourself, and how you can really make a killing on some of these stocks that, if they decline 10, 15, 20% over a year period, or even more, how these gains could turn into 3x, 5x, 10x gains. And that discount's available for the end of this week. If you're interested, feel free to take advantage. If not, no worries. So, guys, that's it for me. Again, questions, comments for tomorrow's podcast, frankcurzioresearch.com. Love to hear from you. It's going to be another Q&A tomorrow. Looking forward to it. And then we have one more podcast on Friday, which is only available to our paid subscribers, which is our Frankly Speaking podcast. So if you're a paid subscriber, you get that podcast for free, right? And that's exclusive, right? That's off of iTunes. Otherwise, tomorrow's podcast will be a last for the rest of the year. Get my whole team off, like I mentioned earlier. Really exciting stuff. They did a great job. But I will see you tomorrow again. FrankCurzioResearch.com. Let me hear from you. Get some of those questions. And I'll see you guys tomorrow. Take care.